good morning, traders. And certainly, if you look at the the weekend news flow that we've been seeing, you can make an argument that it should be risk off and slightly negative for risk sentiment in general. You've seen another missile test from the North Koreans. It's landed in the sea, and I think with that in mind, you haven't seen much of a reaction in the dollar yen, which I think is probably the best risk proxy that we have in the market at the moment. And the US futures haven't fallen in any shape or form. In fact, they're actually pushing very, very modestly higher at the moment. So the market's become very insensitive to some of this more antagonistic foreign policy from the North Koreans, which you have to say has ramped up of late. Clear defiance of the sort of community or the correspondence we've been seeing from the Americans about this. So that's quite interesting that we haven't seen much of a reaction. We haven't seen much of a reaction as well from Angela Merkel saying that Europe should probably distance themselves a little bit from the US and also from the UK as well. And we're keeping our eye very firmly on the polls now. I know the UK polls have been terrible predictors of different elections and referendums before, but you have seen that lead for Theresa May over Corbyn come in quite substantially. Now, we still expect Theresa May to categorically win the election, but her lead and dominance is certainly coming into question there as well. And you've seen a little bit of downside in the pound recently. I think US markets have made new all-time highs on Friday on fairly light volumes, or very light volumes, should we say. That's quite predictable given we have the holidays in focus, and that will play out tonight as well. But markets you can still make money in a very low volume environment, and that's what we're seeing. I think breadth is something that people are talking about in the US as well. But I will say that the markets are all-time highs there, but 18% of stocks are all-time highs, and it doesn't show any kind of euphoric conditions being priced in, especially when you see 57% of stocks above their 50-day moving average. It's hardly that you get markets getting too carried away. So I think these markets grind higher. I think they do in Europe. I think they certainly do in emerging markets. The EEM is breaking out to new highs. That's a market that we've been looking to trade as well. And I think if you look at the weekend news flow, on top of what we saw from Friday, we should see a fairly positive open here in Australia, although SPI futures are not really getting carried away. They closed up 7 points on Friday. I like gold. I think gold's broken and closed through 12.65. I think that probably now trades up to 12.95. So gold stocks look like they could be quite interesting. Obviously a play on real rates. Real rates are down at 41 basis points. So, gold's really reflective of what's happening in there. And there's a lot of data to churn through this week in the US. And so real rates could be a big driver of markets going forward. I think here in Australia, it's interesting that, there's quite a lot of data to feed through, really going to culminate with the capex numbers that come out later in the week and retail sales as well. If you have a look at the implied volatility structures, if you have a look at the weekly straddle, the market's saying that they expect a 57-point move in either direction based on the cost for that straddle. So, personally, I think that looks a bit cheap. I would be happy to buy volatility through straddles this week. I think, that should be closer towards 70, 80 points or so, but that's just the low volatility environment that we live in at the moment. And, the VIX closing below 10 is an interesting story itself, and I don't think that's necessarily unpredictable given that markets have become so comfortable with central bank policy. We've got obviously such low realised and implied volatility in markets, and markets have been quite insensitive to geopolitical and political matters as well recently as well. So an interesting week. We start on a fairly flat firming footing. I like oil, I like gold. Iron ore not so much. I think that looks quite vulnerable at the moment as well.